This drop today, and this may have a big impact on mortgage rates the rest of the week and the rest of the year. Let's talk about it. We have been talking about it, talking about mortgage rates. Again, good economic news, bad for mortgage rates. This is good economic news. Inflation down. The number, that CPI number, much lower than they thought. 2.7%. They were thinking it was going to be like 3.1%. Much lower, okay? Inflation stayed a little hot. Unemployment is starting to kind of ramp up. We talked about it earlier this week. Unemployment's up to 4.6%, okay? The jobs market, because everything the feds are trying to do to slow down the economy, the jobs market is in check, but inflation was kind of holding very stubborn. This is a very good sign. This is a sign that the economy is continuing to kind of flatten out a little bit, showing that the feds are the work that they're doing to keep the rates high is working. That's going to allow for them to ease off their rates. Now, what does that mean for mortgage rates? Again, showing the economy is starting to kind of slow is good for mortgage rates. It's going to pull the mortgage rates down. It's been stuck in that 6.25-ish range for like 3 months, which is a great range to be stuck in. Don't get me wrong. But we kind of need some momentum down. This is some momentum down. Okay, so I really think paired with the unemployment report we had just a couple days ago, you add this to the mix. Now all of a sudden, now you got something. Now you got some momentum going into the end of the month, beginning part of next year. We keep saying we're going to be like 6.25-ish by the end of the year. I think we're going to be below that now based on this. Here's the other thing. We've been thinking upper fives by the time we get the beginning part of spring. This is going to help us head in that direction, upper fives. But long term, and we'll talk more about this as we get into the new year, don't expect much lower than the upper fives. If you get something in the mid to upper fives on the 30-year fixed, man, that's a good rate based on what the economy is looking like. But again, we'll talk about that as we get into 2026. I want to share this with you today because this is going to give us a big drop in rates today, potentially. See how it works out.